Hello and welcome to Money Control. My name is Shraddha Sharma and this is Analyst Take. Tensions have been rising in the Middle East after the recent US attack that led to the killing of one of the top officials. Amid these tensions, the crude oil prices are also seeing an increase. We have Money Control's Ruchi Agrawal joining us to tell us what is driving the prices and how it will impact India. Hi Ruchi, welcome to the show. So, what is the expectations going forward after this impact from the recent attack?
Well, the crude oil prices currently are going up. They have seen a sharp surge, and there is an expectation that this surge will continue and there will be a further surge in oil prices. There have been threats by both the nations, US and Iran, have been threatening for further economic as well as military action. There are expectations that this might lead to a war-like situation. So amid all this, the oil prices have seen a sharp surge, and there is expectation that they will surge even further. Talking about what exactly is happening, well, there is some disruption to the supply, and there is a very strong expectation that in the coming few days, few weeks, the supply will get further disrupted. Especially in a case where this escalates into a war or there are sanctions imposed on different nations, then definitely the supply side might get impacted. While we expect that a lot of nations might want to pump more oil and take advantage of higher crude oil prices, we can't ignore that the winter season is going on, and in winters, many oil producing nations, they have a very limited spare capacity. So countries like Russia, who might want to take advantage, will not be able to do so. So the supply side is expected to remain a little curtailed. Moreover, one country which might want to come in is US. The US producers would definitely want to take an advantage of this situation and pump in more oil. However, in US as well, there is a limited pipeline capacity with which the oil is transported. So because of this limited capacity, there is a limitation on how much the US producers can pump. Talking about the demand side, because there is an expectation that this might escalate into a war, a lot of countries will now come in and want to build up their strategic oil reserves. So this will lead to higher demand in the market. If there is a war-like situation, any country would want at least 2 to 3 months of oil reserves with them. So this will definitely push up the oil prices even further. The demand will go up. The supply is expected to remain in the similar range or a slight uptick. So all this currently is, all this expectation is currently pushing up the oil prices. And in the event of further threats, further economic or military action, definitely the oil prices are expected to go up even further.
All right. So as there is fear around the supply and the demand side, how will it impact India?
For India, if the oil prices do sustain the current levels, or if there is a further uptick in the oil prices, definitely this is very bad news for India. India is currently importing almost some 84% of its crude oil requirement. So uptick in the crude prices means a higher import bill. This kind of disbalances the balance of payment situation for India and could lead to a repeat depreciation. There is a direct impact on the oil companies in the country, oil refiners, downstream gas companies, gas marketing companies, oil marketing companies. For them, oil and gas are the basic raw materials. So a high cost of raw material will definitely mean lower margins for them. A portion of this will be transferred to the end consumers. We could see that the prices of oil and fuel could rise in the retail markets in the coming few days. And the portion will also be absorbed by these companies as their margins will come under the scanner. All the other companies like fertilizer companies, agrochemicals, petrochemical companies, tile manufacturers, they are also expected to be impacted because they consume oil and oil products as raw materials. So again, their margins will be impacted and their product prices can also go up in the coming few quarters. There will be a second level impact to this because many other companies use the products of these companies as their raw materials. So there's a second level impact because their raw material cost will also eventually go up. Higher crude means higher transportation cost. Which will impact almost all the companies. So this second level impact means that there will be a multiplier impact, and because of this there could be some inflationary pressure in the economy. This could also impact RBI's ability to take any interest rate cuts in the future. This could hamper or limit their ability. So overall, it is not very good news for India.
Right. So all in all, there'll be variable degree of impact across industries, if we had to say that. Definitely. So not a good news, definitely. Thank you, Ruchi, for joining us with those insights. That's all for today's episode of Analyst Take. But for more news, views and updates, stay logged on to moneycontrol.com.